Good morning, guys. It's Wednesday, March 5th, 5:24 a.m. Central Time. We've got a little bit of a recovery effort in the grain markets early this morning. May corn futures up 5 3/4 at 457 1/4. May soybeans up 8 1/4 at 1007 1/4. May Chicago wheat up 8 cents at 544 3/4. May Kansas City wheat up 7 1/4 at 555 3/4. May spring wheat up 4 1/4 at 584 1/4. The markets took a beating yesterday. Let's start off there.
They sure did. U.S. corn and soybean futures plummeted on Tuesday amid escalating trade tensions. Corn futures declined to their lowest levels for the year, and soybeans fell below $10 per bushel. Chicago wheat futures declined by roughly 2%. The U.S. imposed steep tariffs on Mexico, Canada, and China on Tuesday, prompting swift retaliation from Ottawa and Beijing, with Mexico expected to announce its response on Sunday. There is concern that increasing trade tensions could push the U.S. and global economies into a recession, further reducing demand for commodities. Corn prices have fallen about 14% since mid-February, driven by trade worries and improved South American crop prospects, which has caused funds to liquidate long positions.
You all know the story by now. The market's sold off because there are tariffs flying around and trade war concerns. What I'm going to do this morning is run through the charts for corn, soybeans, and wheat. And then we're going to run through who's actually buying corn, soybeans, and wheat from the United States. Because as it relates to fundamentals, exports would be the concern, right? That other countries, because of the tariffs, will stop importing or import less corn, soybeans, wheat from the United States. Before I do that, I'll tell you this. There's an intangible here, and the intangible is just general fear. We're in what traders would call a risk-off environment in these markets and also in some of the outside markets, the stock market as an example. The trade war is still largely an unknown what the impact will be, but traders aren't going to wait around to find out what the impact will be. They're going to sell first and they're going to ask questions later. And that's what kind of environment we're in right now, which I know is frustrating. Looking at the May corn chart, we actually, or interestingly, held at some very old trend support. If you draw a line from the August low through the October low, that's exactly where we bottomed yesterday. And we were able to hold that close off the low. So this chart still looks absolutely terrible to me, but I guess that's something to hang your hat on if you're friendly to corn market, perhaps. U.S. corn export sales, Mexico has been our biggest buyer. And you notice if you guys are watching on this chart, this is the 10 largest buyers of U.S. corn this year. China's not on here. China hasn't bought U.S. corn this year to any significant degree. And China, to this point, is the only country that has slapped tariffs on U.S. grains. So I don't know. Is the sell-off in corn warranted? I think the trade is concerned that perhaps Mexico could retaliate. And if they did, then you've got yourself a problem. To go to soybeans, we also, I think at least in my view, were able to hold some chart support under this May contract. That 995 area is an area where the market bottomed in November. And then again in like late December, early January, there was that one spike low kind of around Christmas, I guess. But I'll call that a support area that held. So again, the chart looks terrible, but maybe something to hang your hat on. China is, of course, a huge concern with regard to soybeans. They are the largest buyer of U.S. soybeans, bar none. They account for almost half of all export commitments. They account for, generally speaking, 20% of all demand for soybeans grown in the United States. One thing to note here, I've heard some talk that, okay, old crop beans aren't a concern because we've already shipped most of our old crop bean sales to China, and that's true. But new crop sales are a concern. China would typically come in and start buying new crop beans really at any point in here, but it's really like May, June, July that those purchases would accelerate. So you've probably got like 6 or 7% of the old crop purchases to China that could be at risk. Maybe they don't get shipped. And then, of course, new crop business is at risk, and that's tremendously important. So soybeans, I mean, fundamentally would be the one that you would think, yeah, this makes sense that beans are selling off because of the China tariffs. I'll say this, do tariffs add or subtract bushels from the balance sheets? They don't. They don't. What you could see in beans is kind of a game of musical chairs where perhaps China buys more from Brazil and other global buyers are forced to come to the United States. That's something that could happen. China could just buy less, and we'll see how long they can do that. But I think a lot of the fundamental impact remains to be seen. Again, it's sell now, ask questions later. I don't know what poor old little wheat did to anybody, but it made new lows yesterday. It's really pretty ugly stuff. Mexico's been the largest buyer of U.S. wheat this year, 19% of all U.S. export commitments. So I guess the trade, as with corn, is maybe concerned that there could be some retaliation from Mexico, and we're going to wait and see on that one.
The Trump administration has signaled possible tariff relief for Canada and Mexico. On Tuesday, Commerce Secretary Howard Lutnick said Trump is open to negotiation, but will only adjust the tariffs rather than remove them. A deal could even be reached as soon as today. He said that if either country follows the USMCA trade agreement, they will get tariff relief, but if they don't, they will have to pay the tariff. Both Republicans and Democrats are urging Trump to reconsider the tariffs, fearing that they could drive up costs for Americans and negatively impact the ag industry.
Lutnick was on, it was either Fox Business or Fox News, and he was being interviewed. And he said, yeah, we could adjust this as soon as tomorrow. He actually said, I might announce something, or we might announce something tomorrow, which means today. So this is very fluid. I don't like these kind of markets that are driven exclusively by headlines. I mean, I had questions and emails come in from subscribers yesterday. Joe, what do you think the market's going to do? Whatever, the typical questions. And the answer is the market's as good as the next headline. And that's really the kind of environment that we're in, which is incredibly frustrating and very difficult to navigate.
Mexican President Claudia Sheinbaum said on Tuesday that she will unveil retaliatory tariffs and other measures on Sunday in response to Trump's 25% tariff on Mexican imports. The delay indicates Mexico's intent to ease tensions with the U.S., as Sheinbaum and Trump are set to have a call later this week. According to Sheinbaum, Trump's actions were unjustified and emphasized that Mexico has indeed taken measures to prevent fentanyl from reaching the U.S., as Trump has requested. Sheinbaum stated that Mexico seeks to avoid a trade war, but expects its retaliatory measures to negatively impact U.S. consumers and businesses. Roughly 80% of Mexico's exports go to the U.S., accounting for more than $800 billion in trade between the two countries last year.
There's supposed to be a phone call tomorrow between Trump and Sheinbaum, the way that it sounds. And this could all change. It's like the headlines change every hour on the hour, the way that it seems. Mexico and Canada rely on the U.S. for a lot. And part of me says that maybe they can't afford this trade war because the U.S. is such a tremendous portion of their economic activity. But we'll find out, I guess.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about the premium videos that we've put out this week?
Do the markets always offer you a chance to sell at a profit with regard to corn and soybeans? This is the question that we sought to answer with Chris Barron yesterday. So Chris sent me average production costs by year across his customer base, which is largely Midwest corn and soybean growers, dating back to 2014. And what I did was I took those production costs and I overlaid them with charts of December corn and November soybeans. And we tried to answer the question like, hey, how often do these markets actually offer you an opportunity to profit? Is it every year? Is it every year that you get a chance to sell at a profit? Is it not every year? We made the charts available for download. I thought it was really fantastic. Direct payments are coming with Paul Neefer. We also talked about some of the disaster relief, which there are very few details on disaster relief, some of the beneficial owner stuff. But if you're seeking details about the direct payments, what are you eligible for? There's a lot of stipulations and complications. How many social security numbers are tied to your farm? How is your farm set up? Are you an LLC? Are you a partnership? All of those things matter and matter drastically. And it could be the difference of hundreds of thousands of dollars, depending on how you're set up and how this is all going to work. So if you guys want to see that video, Paul kind of laid it out. We answered a whole bunch of questions. Really great stuff. If you want to see the premium stuff, go to standardgrain.com. You can sign up this morning. It's a $50 per month subscription. You can cancel it anytime. There's no other fee, no other obligation. Nobody will try to sell you anything else. We will send you 2 emails per day. The Standard Grain morning update goes out at 5 a.m. Central Time every business day. Our midday video blast goes out at 10 a.m. Central Time. It's just a ton of info for $50. As I mentioned yesterday, we do a news show here on YouTube, but if you're really looking for stuff that can help you make decisions, that's what we do in the premium stuff. This is only the public stuff is a very small fraction of what we do. So give that deal a shot, guys. I'll forward you a copy of this morning's email.
Some economic models favor a sharp decline in U.S. economic activity because of the trade war. The Atlanta Fed's GDP Now model now estimates that U.S. GDP will decline by 2.8% in the first quarter, down drastically from the previous estimate for 2.3% annualized growth. Just 1 month ago, the model indicated growth of 4%. These estimates are adjusted multiple times per month as new economic data is released. The U.S. stock market, of course, has fallen sharply this week. The S&P 500 has erased all of its post-inauguration gains.
We know that projections regarding the economy should be taken with a grain of salt. I believe it was in 2022, I think it was 2022, that the economists projected a 100% chance of recession, which never happened. But in any case, this is, I don't know if you, I hope you guys understand how big of a deal this would be if we went from a situation where GDP is, plus 2 or 3% to now minus 2.8%. We see negative growth to the tune of 2.8%. I mean, that's you're talking probably recession territory. I know the old definition of recession is that you see 2 consecutive quarters of negative GDP. They don't do it that way anymore. The nerds at the National Economic forget what it's called. The official recession scorekeepers changed their definition. But in any case, I mean, this would be a tremendous decline in economic activity, and it would be a really bad deal. And if that were to be realized, the stock market and a number of other things are drastically overvalued. The S&P is now down almost 2% year to date. We're still up 13.2% over the last year, but we've given back a lot. It still looks like a bull market longer term, but that weekly chart doesn't look overly great to me just right now this week. And we'll see where we close out the week. But there's some risk here if this thing's a rep. But again, economic projections taken with a grain of salt,
U.S. farmer sentiment increased last month despite ongoing struggles in the ag economy. Purdue University's CME Group Ag Economy Barometer Index increased to 152 in February, an 11-point increase from January. The increase was driven by recent gains in crop and livestock prices, along with anticipated federal farm aid payments. The outlook for the future remains surprisingly positive as the future expectations index is significantly higher than the current conditions index. As in previous months, U.S. trade policy remains top of mind for farmers. 48% of respondents believe a trade war is either likely or very likely. It is important to note that this survey was conducted during the middle of February.
Yeah, I kind of feel bad for the people who took the time to compile this and then they put it out on the day that the trade war started.
Right.
So it's like it's totally old news, and sentiment has obviously declined drastically just this week. The percentage, the stuff about farmers being concerned about the trade war, though, and trade policy is extremely important. 44% of respondents said that trade policy will be important to your farm in the next 5 years, and it appears at least this week as if that's going to be the case. And what did they say? How likely do you think U.S. ag is at risk of a trade war that results in a significant decrease in U.S. ag exports? And the majority said likely or very likely, or I guess somewhere neutral. But people were concerned, and I guess the concern was justified.
We had 2 flash sales on Tuesday. U.S. exporters sold 5 million bushels of white wheat to South Korea for delivery during the current marketing year, and exporters also sold 20,000 metric tons of soybean oil to unknown destinations for delivery during the current marketing year.
Good to see. Nothing overly substantial. What did cattle do yesterday?
After a rough start, cattle futures ended the day mostly higher. Live cattle were 70 cents to $2.40 higher. Feeders were 17 cents lower to 80 cents higher. Box beef was also higher. Choice was up 92 cents at $314.85, and select was up 161 at $304.02.
So the story was that traders were concerned about tariffs with regard to beef and pork early in the day, and then they said, "Oh no, that doesn't matter." Is that what happened?
Yeah, the worries must have subsided. I think there are thoughts that maybe these tariffs won't be as bad as they originally thought.
Yeah, I mean, the markets opened sharply. I mean, you look at
Right.
April live cattle; they finished like $5 off the lows. So I don't know, volatility.
Yeah.
Outside markets this morning, U.S. dollars off, stocks are a little bit higher, bonds are down just a little bit. Crude oil is down $1.07 in the April WTI at 67.18. If people really think a recession's coming, crude could see some more downside along with a lot of stuff. Everybody have a great day today. We'll be back on Thursday.